Hey, good afternoon, everybody. Let me share my screen and we'll go ahead and get started here. We have a strong day in the market so far today. What we're going to talk about today is, of course, the markets. And if you saw my tweet, we're also going to talk about Stocktwits did a survey of their members and had well over 1,000 responses about what they expect to be the top 10 stocks for 2025, and then three under the radar stocks. So we've got a lot to cover here today. Let's start with the market. This, of course, is the S&P 500 on a daily time frame on the left, and on the right we have a 15-minute time frame. I usually have a 30-minute time frame on the right, but I've switched it to the 15-minute here just recently because of the little bit more market volatility and wanted to get a little bit into the nitty-gritty details. Now, when you look at the daily chart, first, what you'll notice if you listen to my weekend video, we're looking at the potential of support at the anchor off of the August low. And when you look at it, it looks like, wow, it just nailed it perfect. And, I suppose, if you have is more faith than I do in that level, and you just bought there, then it's been a great purchase. I personally don't buy the dip. I wait for some strength. I day traded it that day. I day traded it yesterday, and I've day traded it today, but I haven't had the bulk of this move. I still look at the daily time frame and I see over here a pattern here that we've discussed. We had this high, we had a lower high, then a lower low, another lower high, another lower low, and then this high, another lower low. And is this going to be another lower high, or is this going to be the beginning of a turn? And that's what everyone wants to know. And I'm not going to tell you I have the answer, but I can tell you my approach of what I'm looking for the evidence that we might be able to turn. Now, first on this daily time frame, you can see that red, that's the 20-day moving average. We're right up against that right now. And just overhead, we have that blue 50-day moving average and the orange anchor from the election. So maybe we continue to, what I'd like to see is maybe we continue to move up, even up to that trend line in the next couple of days. And then we begin to pull back a little bit. The pullback would be really important because what I'd be looking for is maybe a test of this blue anchor. That's the year-to-date anchored VWAP, and you can see that here on the 15-minute time frame with more detail. And we can see it was resistance, turned support back to resistance. So I'd love to see maybe in the next couple days that we pull back down towards that anchor from the election. I'm sorry, from the beginning of the year, the blue one. And then if we can start to turn sideways in here, and then show that there's buyers at the year-to-date anchor, that I think would pave the way. I would definitely be a buyer for a swing trade over here, thinking that this would now break the pattern that we see on the daily time frame of lower highs and lower lows. So in other words, what we're looking for is a higher low, and then I don't want to buy the higher high. I want to buy instead over here as it begins to move higher. That way, if I wait for the breakout at 596, let's just call it, then my stop would go way down here. If instead I buy right here as the buyers are just emerging, then I have the odds in my favor. So for now, I still consider this to be a short-term day trade environment. It was a great day trade first thing in the morning off of the release of the CPI. If you're familiar with my strategy of, when we gap above the 5-day moving average. So what we're looking at now is the SPY 15-minute chart in the upper left, Q's 15-minute chart, and semiconductors on the right. Below that, we have a 1-minute chart of these markets. And the reason I have those shorter term timeframes is we gapped above the 5-day moving average, and the 5-day moving average is starting to rise. Well, the strategy that I've been talking about and posting to Twitter for at least the last 5 or 6 years is when we gap above a declining 5-day moving average, what we then look for is chase the gap or wait for VWAP. So what I'll do is go to the S&P and we'll look at a 1-minute time frame. So what that means is we don't chase that gap higher. And this is a strategy that I've written about. You can, look at chase the gap or wait for VWAP. Just Google that and you'll see an article I did on it 15 years ago. Updated it in my Anchored VWAP book. But it basically is don't chase that gap. Let the sellers have their little chance to take control, sucker in the short sellers, and then as the buyers regain control, to be a buyer as it gets back above the VWAP, not above the high of the day. So we're beating the people who are, opening range buyers by buying strength as the buyers regain control above the VWAP and then stop below the low of the day. And we saw a pattern, and this is what I've been talking about, in all of these videos that we've been doing here on Stocktwits, is that, you look at the pattern of higher highs and higher lows and say, where do I take some off? Well, as it breaks that pattern and makes a lower low right here, take a third off. As it breaks the low here, take the rest of it off, take the balance off, and then look for another entry. Was there another good entry above there? Maybe above this level there would have been. So instead, we broke below the VWAP and now we're at it. And here's an important level. So at this point, I'm looking at this market saying, if the buyers are going to maintain control of the session for today, they've got to get back above this VWAP for the day and then continue to go like this. Instead, if we get trapped below here, what I'd be looking for is, if you're a really aggressive short seller, maybe to short it below here at this point with a stop above this right here. So as we continue with this broadcast here live, we will update this. And I will tell you that to get short under here wouldn't be a bad idea for a day trade, okay, with a stop above here. And that's the key, is the stop. When we'll talk about how this trade will, continue to unfold here. But right now, it's just a level of interest. So we're looking to get short below this as it makes a lower low, below the volume weighted average price, and our stop will go above that peak right there. So we'll follow up on that. But going back to the other markets, kind of the same exact story. NASDAQ came right down to the anchor off of the September low, nailed it to the penny. You just can't make this stuff up. If you're not following the volume weighted average price levels, you're just trading with one eye open, basically. This market is a little bit stronger here today in that it is above the anchor from the high for this year. That red line is the 2025 high, and the blue is the year to date. So you can see that so far we're holding above that. So this isn't a market I would want to short. I would prefer to short the S&P for a scalp. And I don't think it's I still don't think it's a great idea to short, but for an intraday scalp, it might be okay. The NASDAQ, it's struggling with the daily VWAP here, but it's holding the week to date. So if it continues to hold that, that'd be great. If it broke down and then came down to the 5-day moving average, maybe, tested the anchor from the low from this week and then got back above it in a few days, something like this, then I think a buy above there would be good. But we still have the same exact pattern in the NASDAQ. Lower high, that we have that high, we have a low, then we had a lower high, a lower low, a lower high, a lower low. Is this going to be another lower high? Or are we going to see a higher low and then a higher high to turn this market around? So as good as today is, and enjoy the gains while you have them if you're involved, it hasn't turned the corner. The Russell 2000 came right down exactly to that zone that we spoke about last week, right in here, the conjunction of the anchor from the April low and the 200-day moving average, and it trapped shorts underneath there, and we're seeing a nice reversal. Semiconductors, a little less enthusiastic here. On this daily time frame, we're still in this bigger range. We got right up to the year-to-date anchor. What I'd like to see is for it to pull back like this and then maybe continue to move higher. Energy is where the strength remains. It's getting a little bit long in the tooth, and you can see it's getting, a little bit of a pullback here right now. But those are, some of the names or I'm sorry, that's a look at some of the ETFs. What I'm going to do right now is try to find that list I just posted and get to those names. So I apologize, I'm working off the laptop. So first up on the Stocktwits 2025 retail picks are, of course, Tesla. Who would expect something different than that? And it's been a great stock. So of course, there's a bullish bias here. It's in an uptrend. It's got Elon, in with the new administration. That's going to be beneficial for it. Here's what we've looked at previously. The inverted head and shoulders pattern was broken. We exceeded the target for that inverted head and shoulders pattern. We broke above that all-time high, and then we've been consolidating actually in a really nice trade range. So we're looking at right here a weekly chart. Each one of these bars is 1 week. And I prefer bar charts. I find candles to be very distracting and way overrated. Anyways, last week we had an inside week, meaning the low of last week was higher. I'm sorry, the high of last week was lower than last week, and the low was higher than the previous week. So all the trading occurred inside of the prior week's range. And so far, 2.5 days into this week, we're seeing another inside range. So when we look at the daily time frame, actually, let's look at what have I been using here, this 65-minute time frame. What we've been seeing is a very clear pattern here, and that is the anchor from the election. Why did we anchor from the election? Because it was an event that changed the psychology and the supply-demand shift dramatically for Tesla. And with good reason, of course, because Elon in bed with the administration, that's going to be great for the perception is it's going to be great for everything that Elon touches, including Tesla. And of course, Tesla's Tesla. So we saw a perfect touch and bounce from that anchor. We saw it over here as well. We discussed that last week. And then just a couple days ago, we came very close to it. Now, that first bounce brought us right up to the anchor from the all-time high. That's this red line right here. So we always want to put our anchors at key events, all-time highs, lows, beginning of the year is the blue line, and we came down and tested that yesterday. So what did we have here? This week, we've seen close to a test of the anchor off the low, a rally straight into the anchor off of the high again, pull back to the 5-day moving average and the year-to-date anchor yesterday, gap up today, and now here we are at that again. So the longer-term trend is higher. So it's innocent until proven guilty. If I was anything other than a swing trader, I would say that, right now it seems like stops should probably go underneath the low of this year, which was made on the first day of this year, January 2nd. We also have a rising 50-day moving average in there. We're right now, so, just as we're pinching between the anchor off of this election gap and the I'm sorry, and the anchor from the all-time high, we're also pinching between the 20 and the 50-day moving average. Now, when I wrote that book with the anchored VWAP pinch, meaning the pinch means it's in between these VWAPs building energy. A lot of people really glommed onto that strategy. I shouldn't say glommed onto, but recognized how valuable that strategy is. The thing is, when you have a pinch that's as wide as this, it really becomes irrelevant. There's not much value in the pinch. What we want to see happen is, let's say we were to start pinching like this between the anchor from the beginning of the year and the anchor from the high. That would be better because what we'd be looking at is a nice compression of energy. Whereas these are so wide and loose in here, it doesn't offer much value. So maybe we come up, start to do this in the next couple days. If so, and then we see the anchor from the beginning of the year curl up under it, I think, Tesla's getting ready for another push higher. Maybe it just goes today. I don't think it does. It's a little bit extended into this anchor from the all-time high, but Tesla's looking good. I'd really love to see it even just for a day or so, maybe pull back like this and then get going. And then your worst case stop will go under here for a swing trade. And everything I talk about, by the way, is a swing trade unless somebody asks me about a different time frame, or maybe half of your stop under here and half of a stop under there. So Tesla definitely deserves its space on that leaderboard. Palantir also deserves its place on there. Now, Palantir's getting a little bit deeper pullback, and the thing that's interesting about this one is that the anchor from the election, we're stuck below that right now. We're also below the year-to-date anchor, that's that thick blue line, and we're below the declining 20-day moving average. We're holding with a rising 50-day moving average, and a lot of people, will get out because it breaks the 50. The direction of the 50-day moving average is more important than whether we're above or below that 50, and that's why I have this line right here. This blue line, this vertical dashed line That's where we were 50 days ago. So I know that this 50-day moving average will continue to rise in the next 2 weeks as we get rid of this data, meaning as we average, even if the stock went sideways, the 50-day moving average will continue to rise. I'm a little bit cautious on Palantir right now because we are below the anchor from the election, I'm sorry, the beginning of the year, and we have a declining 5-day moving average. So I'm a little bit more cautious about this one. It might need a little bit more time to digest this massive rally that it's had and perhaps do something like this. Not necessarily fail, but I think that it's getting, it's a little bit extended up in here. So be patient with Palantir. Maybe it comes down to the 20-week, 100-day moving average and then starts to rebuild. But right now, I'd say just a little bit cautious until we can rebuild. We can follow up on this chart next week if you want. NVIDIA, buy the rumor, sell the news. We had the CES event right here and it broke out and it got hit hard. Now, the good news is it's coming down to the anchor from August, and that has been an important level the last three times, one, two, three. So it's really, to me, NVIDIA is a little bit more neutral than anything. It's getting pretty sloppy up in here. It basically hasn't done anything for the last, 6 months or so. And it's not necessarily topping, but it's correcting more through time. I'm not as bullish on NVIDIA as the average person seems to be. Um, Perhaps we continue down towards the 200-day moving average and see some shakeout. I think you're going to need a lot more time, and you're going to have to be a little bit more patient with NVIDIA. Lunar, I'd say, be very careful with this one. It's in a great uptrend. There's no doubt about that. But the thing is, this one has a percent ATR of 11.8, meaning the average daily range, at least over the last 14 days, is basically 12%. And most people think that, hey, isn't that great? All it does is go up because if you look at a monthly chart, that's a daily. No wonder I got changed somehow. If you look at a monthly chart, well, it's just up every month. Or if you look at the weekly chart, isn't that a wonderful stock to own? And it is showing a pattern in here of higher highs and higher lows. So the trend is your friend. The question is this the third and final drive higher? If you're an Elliott wave uh, technician, they would say that is, your fifth and final wave and could be a reversal. I'm not so much into that. I find Elliott wave to be a little esoteric, and I see that people are always going back and relabeling what their one, two, and five is. Anyways, we're holding the 20-day moving average. That's positive. We're below the year-to-date anchor. That's a couple points off. We're super extended. We've had this run from basically, $3 to 22, up 700% in the last 6 months. It's getting, it's in the nosebleed territories, and it's, it's in pullback mode. It's below the year-to-date anchor. So I would say, as far as this one being popular for the year ahead, just be aware of where it's come from. It has gone, like I said, 700%. What more are you expecting from this stock? Maybe it goes to $50 per share. I hope it does. But while it's below the declining 5-day moving average and that year-to-date anchored volume weighted average price, I'd say just be a little bit patient with it. SoFi, I haven't looked at SoFi in a while, so this is one that's uh, I'm prepared to talk about it, but it's had this really big run, and that run began. Let's look at the weekly chart. It began kind of where it was supposed to. It ran up through this prior band of resistance, and now here we are up, making higher highs and higher lows. We have a beautiful pattern here of expanding volume in the direction of the trend. And then on the retracement, we're seeing a diminishing volume. So that's good to see. What we also want to see, of course, is, well, what's the anchor from the beginning of this move? Well, we're still holding above that. Let's get a little bit more detail on the daily time frame and say, where did this move begin? Really kind of right here, or from this gap, and we held the anchor from that gap. Near term, okay, on the daily time frame, it looks very similar to the rest of the market, which is we have this high and a lower high and a lower low, another lower high, another lower low, and even if it breaks here, if it breaks above this high, technically that's a higher high, But the definition of an uptrend is higher highs and higher lows. So if it breaks beyond here, I would say be very careful and be aware that it's likely to be a sucker move above there, that it would need to pull back, get back going like this, get cradled by the 20, have that 50 come in here, and then you would want to be a buyer over here, not at the higher high, but as the buyers regain control. Because if this is in fact a higher low and you're risking, let's say 50 cents per share, and your risk is, or you're risking $1 per share, and your risk unit is $1,000. Well, if you're risking $1 per share, buying the breakout, that would be 1,000 shares. But if you're risking 35 cents, well, now, buying right here as the momentum comes in, now you can buy 3,000 shares. You've tripled your upside potential with the same amount of risk. So that's the way I would look at SoFi. It's in a longer term uptrend. It's innocent until proven guilty. There's no reason to overthink that. But it's not time to buy yet until we start to see this reversal take place. Soundhound is a little bit, it's down to the 50-day moving average. As far as this being a big winner in 2025, I would be very careful with this one. And this is what I was pointing out. It might have even been on this show last week. Is that the stock has a history of some big rallies, but what happens after these big rallies? So, in other words, what's the personality of the stock? Is this a blue chip stock that's just going to continue to go? Or is it something that, according to Herb Greenberg, he tweeted something about how the fundamentals are terrible about this stock. And I said, who cares? Only price pays. And that's when it was going up. But we've seen the pattern break here. We saw this pattern here, higher highs and higher lows. That was broken. We saw a lower high and a lower low. Now we've seen this great big correction, and maybe we get a bounce, but I would treat it as a bounce. I think that Soundhound is a broken stock for now. It's going to take a lot of time to heal this one. You've probably seen your highs, and this is uh, you'd have to double to go back to the highs basically. And Soundhound is a stock that can double pretty easily in hindsight, but I think there's a lot of recency bias looking at this stock. I think it's kind of a broken name. I would say pretty much leave it to the only the highly skilled day traders. Let's look at AVXL on the weekly chart. Now, this is life sciences, which means it's a biotech stock. I know nothing about this company from a perspective of what they do. And so I need to look back at the history of this stock and see how it trades. And again, understand the personality of the name. And when I look at biotech, when I look at it, I probably could have told you this was a biotech stock without knowing the name because of the way it trades. And that is similar to what I was just pointing out in Soundhound or whatever the other one, Lunar, I think, is that we have these big rallies, but they completely fall apart. And that's the way biotech stocks work often. So that just it doesn't mean I wouldn't trade the stock. It means take a couple points off of it. So when we look at this weekly chart, let's see. This was an important band of resistance, and so far it seems to be holding the support. So a break below and hold below there, a hold below 10 on a weekly basis, I think the stock is dead. It probably goes back down to the lows and, leave it alone. As far as where we are right now, I like to see that it's touched that anchor perfectly from the election and is finding buyers, but we're also below the anchor from the beginning of the year. So if this stock can kind of do a little bit of this, and then see that 5-day moving average flatten out in the next 2 or 3 days as we get rid of this data today and this data tomorrow, then I think for a swing trade entry, you could buy it above here with a stop under one of these higher lows. And again, the anchor from the beginning of this week would come up like this. So I'm a little suspicious of it because of the life sciences aspect of it. It's a biotech. By the way, up here in all these charts, be aware we're entering earnings season. And on all these charts, I have the earnings date. So for this one, it's February 5th. It gives you a little bit of time till the next earnings report. ASTS, this one has kind of been just, drifting lower in here. We saw this really big uptrend, and it's a slow bleeding correction. So It's been in a super choppy range here recently on the weekly chart. Just all these back and forth, up and down. Just really, I mean, you've got to be a scalper, I think, to take advantage of this one right now. And my concern is just all the choppiness. It did just make another low. If this is a shakeout, it might end up doing something like this. I think, though, for ASTS, you're going to need at least a couple weeks for the volatility to kind of squeeze out of this name before it's potentially ready to get going again. And maybe it could do something like this where it runs up towards this recent band of supply, come in here, create a couple higher lows, tighten up, and then get going. But for now, I would leave ASTS alone. What one's that? Rocket Lab. Rocket Lab is another one very similar to Lunar. I mean, it's had a massive run. So as far as, the stock just in August, okay, this stock in August was $4 per share. It ran to 30. So it ran 750%. Is that the type of stock that's going to continue to move higher? Possibly. It's beyond all-time highs, so that's good. There's no natural source of supply. I would be very careful with this one. So far, it is creating still the pattern in here. We have this high, we have this low, we have this high, we have a low that tied. So then we had a higher high, then we had a higher low, another higher high. We broke that. Now, if it gets stuck in here, we might start to see a deeper pullback. It's had a massive run. Be careful with this one. I would say play a strong defense with this one. It seems like it's correcting through time right now. It might be due for at least a shakeout, somewhere a nasty shakeout down towards that 20 level. Um, perhaps probably not that deep, but maybe if we hand off. So maybe into that 1920 level, it could see a nasty shake off. I would be very careful with Rocket Lab based on how much energy it has expended. MSTR, it's going to depend on Bitcoin. That's all there is to it. And Bitcoin behaves well right now, so I'm just going to defer on Bitcoin on Mister because it's really kind of stuck below this prior band of support at the anchor from the election. Instead, I'm going to go to the other stocks. Simply, the under the radar ones. Actually, Lunar's on that one as well. So I'm not going to skip that. Honeywell, it's got, it broke a big band of support. It's going to be difficult for it to get back above there. So while it's below 225, it needs to work and heal. Target Therapeutics, I like this one. I made a lot of money on this one last year, and I saw they released their revenues at least yesterday. That got the stock moving a little bit. It's below the 20-day moving average. It's below the anchor from the election. So I'd like to see this one heal a little bit and in a couple weeks maybe get going. I also wanted to follow up on a couple names from last week. AMC is doing exactly what it's supposed to do. We spoke about it coming right back down into this range. Somebody asked me about Plug, and Plug is actually behaving, so 1 week ago today, we were talking about it. It was right here. And I said, be careful with it. That's exactly where we were 5 days ago at this time. It's tightening up a little bit. So I like the way it's holding above last year's anchor. It's above the 200-day moving average. So it's worth keeping an eye on as it starts to tighten up a little bit. I also want to I'm glad to see this wasn't one of the top names for 2025, SMCI, because I think this one's a short. I think it's likely headed down towards that 20 level. And I look up here and I see that we're at 1043 because I am here in Colorado. So I don't know if we had questions. We have a lot that we covered there today, and I hope that was helpful to you, especially looking at those popular names. I think people always enjoy that. But I'm looking here and I don't see any questions. So, what are a couple names I'm looking at? As I said, SMCI, I think it's dead. Snow is starting to look like it's tightening up a little bit as well. It keeps coming up to the anchor from this gap and the high. So if Snow can kind of do what I've been talking about with these other ones, come in here a little bit, tighten up, and then get going, that's a good opportunity in the coming days. PSTG might be one. It's really been in a choppy range here. If you look at it, just back and forth in here. Yesterday we saw a nice shakeout. That's what I like to see. And if this one can tighten up in a couple days, I think PSTG is another one worth keeping an eye on. So let's take a look. Actually, I said I was going to follow up on the SPY, and I obviously wasn't trading it, so it didn't set up. Or if you had, okay, so listen, so here's the thing. If you had shorted right here, then it was a stop out right there. So not every trade is going to work. Sometimes support at the VWAP turns to resistance, but that's why we have our stops. So buyers are still here in terms of the S&P, in the NASDAQ, and the semiconductors are all back above the VWAPs. And this is nice to see in particular on the NASDAQ that we held the year-to-date anchor in here. So NASDAQ, in my mind, I don't know what the percentage numbers are right now, but in my mind, the NASDAQ is the outperformer because it held the anchor from the beginning of the year. So it looks like that is the end of our scheduled broadcast here. Thank you, everybody, for joining in. We'll do it again, same time next week, right here. Have a good day and good trading.